Well, inflation came in higher than expected this morning, and that bumped up rate hike expectation. That is going to have an effect on Canada's housing market and perhaps even the luxury housing market. We've got President and CEO of Sotheby's International Realty Canada, Don Kottick, joining us now for a view on how that might play out. Before we talk about how higher rates may play out in the future, Don, maybe you can just give us a state of affairs now. Because, you know, higher rates have been working its way through the luxury market, which I think we're defining as $4 million or higher.
Right. Good morning, Amber. Great to see you. So, yeah, I guess to put things into perspective, I think we have to understand that, you know, we're coming off 2 years of what can best be described as an anomaly. And then so you're coming off these record-setting, you know, kind of activities for the last couple of years. And we're coming into an environment where we have rising inflation, rising cost of living. We still have excessive government spending. We have volatile financial markets. We have geopolitical headwinds. And then we have these shocks from the recent interest rate increases. So the market, the buyers and the sellers are really behaving as we expected. And one of the things we're finding is there's still a lot of pent-up buyer demand right across the country. And a lot of consumers still have a lot of cash. But so right now, we're starting to see inventory is an issue in a lot of areas. In some of the peripheral areas, we're starting to see some of the inventory increase a little bit. But, you know, the other thing you have to take into account is we have immigration that is, you know, still planned to proceed in quite large numbers. And we still have the chronic undersupply of inventory right across the country. And that's really where we find ourselves at this point in time.
Well, you know, it's one thing to build, you know, those kind of homes, but it also goes to psychology. And you kind of mentioned it, Don. I'm stunned by this stat, 42% drop in listings. Is that right? So people are looking at the market and, you know, maybe if you're a luxury homeowner, you have a little bit more flexibility. They're just deciding not to sell in this market.
Yeah, I think what's happened is people are, you know, taking a pause. Once again, you know, you're coming off 2 years of this record-setting market. And then you also, you know, had summer that appeared. People hadn't taken vacations for quite some time. And so there were a lot of people that were taking vacations. And then, you know, so there was going to be kind of a natural pause in the market. And then we had the shocks from the rate increases, which were, you know, quite substantial. And the Bank of Canada is talking about a few more rates. So some people, you know, are sitting on the sidelines and they're making their decisions really more strategically than anything else at this time.
I loved looking at what was an outlier in your report on luxury housing, and it's Calgary. And there's been a little bit of you know, a fight for in-migration into Calgary. We've all heard those ads in Ontario urging people to move out of Ontario because of high home prices and into Calgary or into Alberta generally. And so the Calgary market seems to be bucking the overall trend.
Yeah, well, I mean, for years, they were kind of the outlier on the other side. And then now they're kind of the favored child. And I guess, you know, there's a lot of confidence in Calgary right now. A lot of businesses are still, you know, deciding that they're going to make Alberta their home. So, you know, we do see this migration from Ontario probably largely, but also from BC as well, too. So they are enjoying, you know, the role of the outlier right now at this point in time.
Prices have, you know, not moved as sharply to the downside because people are just willing to sit on their home rather than sell lower than the price that they would like. As we look at a rising rate environment, do you see a material drop-off in prices coming?
Well, it's interesting because we still have this chronic undersupply of inventory that really hasn't been addressed. The governments always want to attack the demand side, and they're not really addressing the supply side. So, you know, even in this environment where we are starting to see, you know, some inventory creeping, it's in the really premier neighborhoods. If you list right and, you know, you're in one of those areas where people want to be, we're seeing the odd you know, transaction come in competition. So it's really about location, understanding the market, and then understanding your personal needs, and then behaving, you know, in accordance with that.